Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Prologis, and let me tell you, it's not just about warehouses. They've made some changes that could really shake things up for their investors. Think of it like changing the rules of a game right in the middle. It can have big effects. We are looking at an 8K form, which is like an update companies give to let everyone know about important changes that might interest investors. This one was filed because of something that happened in February of 2025. The report tells us that on February 20th, 2025, Prologis' board of directors made a change to the company's rules, also called bylaws. These bylaws decide how the company is run, so changing them is a big deal. Specifically, this involves who gets to call a special meeting. A special meeting is basically when shareholders, the people who own the company, get together to vote on important decisions. Before, if you wanted to call a special meeting, you needed shareholders representing at least 50% of all the votes to agree to it. Now, that number has been lowered. Now, only 20% of the votes are needed to call a special meeting. This is a pretty big change because it means it's easier for shareholders to get together and potentially influence the company's direction. So what does that mean? Well, imagine you're a shareholder who's not happy with something the company is doing. Before, it would be tough to get enough other shareholders on your side to call a meeting and try to change things. But now, with this new rule, it's much easier to gather the support you need. Now, the company also included the full text of these new bylaws as an exhibit that's like an attachment to this report. That way, anyone who's interested can read all the details themselves. So what's the big picture here? Prologis has made it easier for shareholders to call special meetings. This could give shareholders more power to influence the company's decisions, which could be a good thing or a bad thing depending on your perspective. Now, let's zoom out and think about what this change might mean for Prologis and its investors. On one hand, giving shareholders more power could make the company more accountable and responsive to their concerns. If management knows that shareholders can easily call a special meeting to challenge their decisions, they might be more careful to consider the shareholders' interests. On the other hand, making it easier to call special meetings could also create more uncertainty and instability. It could open the door for activist investors, people who buy a lot of shares in a company and then push for big changes, even if those changes aren't necessarily in the best interests of all shareholders. Ultimately, whether this change is good or bad for Prologis will depend on how it's used. If shareholders use their increased power responsibly and work constructively with management, it could lead to better decisions and a stronger company. But if it leads to infighting and short-term thinking, it could hurt the company in the long run. It is also worth noting that this change is happening in February 2025. This might signal a shift in the company's strategy, perhaps to focus on better shareholder relations or prepare for potential challenges from activist investors. Overall, Prologis seems to be trying to balance the need for shareholder input with the need for stable management. It's a delicate balance, and it will be interesting to see how it plays out in the coming years. Thanks for tuning in to Corporate Decoder. If you found this analysis helpful, please like and subscribe for more deep dives into the world of corporate filings.